For more on the Canadian economy, we talk with Emanuella Enenajor, an economist at CIBC World Markets. She's joining us live from Toronto. Well, hello there. Our first question on the economy in Canada is that it expanded for 0.3% for the last quarter, which beat estimates. What's pushing the Canadian economy forward?
Well, the 0.3% expansion was just for the month of November, and it really was an upside surprise. Economists had been expecting something a little bit tamer. And when you look at the numbers, there really were a couple of key factors that was pushing the economy forward and that contributed to that acceleration in growth. For example, manufacturing production was a key driver. We know that factories have struggled during the recovery in Canada as we simply haven't had that resurgence in U.S. demand. Well, gradually we're seeing some of that resurgence, particularly autos demand, and that helped Canada in terms of factory production because we did ship more produced manufactured goods, including autos, to the U.S. Other sectors, such as resources, were also in the spotlight in the month of November. For several months, stalled oil production activity contributed to a weakening profile for growth. We saw some of that bounce back, as well as the mining sector. And other sectors were also quite strong, such as retailing, wholesaling, so really broad-based gains, suggesting that while Canada's economy is really moving below the speed limit, there really was a little bit of an increase in momentum towards the end of last year.
In Christian's story right before we came to you, he talked a little bit about the unemployment rate in Canada, which is at a 4-year low. What's Canada doing right?
Well, I think in relative terms, it's very interesting. People like to compare, for example, the Canadian labor market to, say, the U.S. labor market or even the Eurozone labor market, where we're seeing a very different story in terms of their jobless rate moving up. And I think there are a couple of key distinctions. In Canada, for example, the recession wasn't as deep as some other regions, certainly not the U.S., for example. And so we didn't see as aggressive job losses on this side of the border. As well, during the recovery, we had a very, very robust recovery that was in large part aided significantly by government spending. For example, in the United States, about half of the jobs that haven't been gained back since the recession were jobs in the construction sector. In Canada, on the other hand, we had government spending really ramp up the infrastructure sector, and we've had an increase in housing demand and housing-related activity, which really supported that sector, the construction sector of jobs. So really different economic profiles that have supported a more robust employment recovery in Canada.
The Canadian dollar is relatively strong. The Canadian economy is relatively strong. How much of that strength is related to the demand for raw materials from around the world?
Well, Canada really is a key resource producer, and that accounts for almost 20% of Canada's entire economic pie, if you will, 15% directly in terms of resource extraction, and then another 5% or so in terms of knock-on effects. And I mean, the bottom line is that a lot of what Canada produces in terms of resources, whether it's natural gas, oil, metals, fertilizers, a lot of that does go directly to the United States, to the U.S., as well as to regions in the rest of the world. But that upturn in U.S. activity and demand that we've seen in the last couple of quarters has actually been a real positive for Canada because exports to the U.S. have been increasing, whereas those to other regions of the world have been dampening to some extent. A couple of things I would point out is that Canada's resource sector has been increasing in terms of its relative share of economic activity in Canada as the nation continues to develop its oil resources as well as resources in other sectors. And Canada also continues to diversify its export market. So really, in terms of looking forward, what will be driving growth in Canada over the next 5-10 years, it really is that raw materials and resource sector.
Emanuella, thank you very much for your analysis, joining us from Toronto from CIBC World Markets.